Hi guys, I'm coming on today. This is about being Uber drivers or Lyft drivers. Your taxes could be a little different than what you're used to. Okay, so the highlights of this live is your 1099-K, your Schedule C, the Uber and credit card fees, record keeping, vehicle expense options, home office, and a few other options. So we know that tax time is approaching rather quickly, and if you're an Uber, Lyft, or a competitor, here's some information related to reporting your income. You are considered self-employed and will report the income and deductible expenses on your IRS Schedule C to arrive at your taxable income and self-employment income. Your driving income will be, trying to fix this, hold on a second. Your driving income will be reported to the IRS information from 1099 on the form 1099-K, which reflects the entire amount of your fares charged on credit, the fares that are charged on your credit cards through the Uber reporting system. So if the 1099-K includes total charges, then it's also included on the Uber fee and the credit card fees, both of which are deductible on your Schedule C. To determine the amount of these fees, you must first add up all your direct deposits made by Uber to your bank account. Then subtract the total deposits from your amounts on the 1099-K. The rest will be the total of the Uber fees and credit card processing fees. And when I say Uber, I'm talking about the other companies as well. So I just use Uber to describe all the companies that are just like Uber. If you drive for multiple services, you will have multiple 1099-Ks and deposits from multiple services. It is highly recommended that you keep copies of your bank statements for the year so that you can verify deposits in case of an IRS audit. You will also need to include your income on any cash tips that you receive that are not charged through Uber. You should always keep a notebook of your vehicle where you can record your cash tips. Maintaining this tip logbook is important in case of an audit. You really don't want to get stuck in an audit with no documentation. The largest deduction on your Schedule C is likely going to be your vehicle expenses. The first step into determining deductions in your business use of a vehicle is to determine the total miles the vehicle was driven, and then the total miles, the number of deductible business miles, and then non-deductible personal miles. So total miles driven for the year, then you're going to have your business miles written down, and then you're going to have your personal miles written down. Recording the vehicle's odometer reading at the beginning of the year and again at the end of the year will give you the information needed to figure the total miles driven during the year. Although Uber reporting system provides you with the total fare miles, it does not include miles between fares, which are also tax deductible. So literally, when you leave your house and make it to the first stop, that first stop up until you're done are all deductible mileages. This is important that you maintain a daily log that the miles driven from the beginning of your driving shift to the end of the shift, which is what I just said. The total of the shift miles driven will be your business miles of the year. If you know the business mile driven and total miles driven, you can determine the percentage of vehicle use for business, which is used to determine what portion of the vehicle expense and deductible. You may also use the actual expense method or optional mileage method to determine your deduction for the use of the vehicle. If you choose to use the actual expense method in the first year you use the vehicle for your business, you cannot switch to the optional mileage method later that year. Once you choose one, you have to stick with it. Once you choose actual expenses, you have to stick with it. On the other hand, if you choose optional mileage rate for the first year, in the first year, you're allowed to switch between methods in future years. But if you write off your vehicle depreciation, but if you write off for the vehicle depreciation, it's limited to the straight line method rather than an accelerated method. Now, a lot of you may not understand that, so it's very important that you discuss that part with your tax preparer. For 2017, the optional mileage rate is 53.5 cents per miles. The IRS generally only adjusts the rate annually. If using the optional mileage rate, you need not track the actual vehicle expenses, but you still need to track the mileage. The actual expense method includes deducting the business cost of gas, oil, lubrication, maintenance and repairs, vehicle registration, insurance, interest on the loan used to purchase the vehicle, state and local property taxes and depreciation or lease payments if the vehicle is leased. The business cost is the total of all these items multiplied by the business use percentage. Since the vehicle is being used to transport persons for hire, it is not subject to the rules that generally limit depreciation of business autos, allowing for substantial vehicle write-off in the first year where appropriate. However, if you converted a vehicle that was previously used only personally, the depreciation will be based upon the lower cost of the current fair market value and no bonus depreciation will be allowed, unless the conversion year was the same year as the purchase year. Other deductions would include cell phone service, liability insurance, and perks for your fares, such as bottled waters and snacks. So if you are one of those drivers who keep complimentary water and snacks in your car, in your vehicle, then you can definitely write those off as a deduction. Depending on your circumstances, you may qualify for a business use of home, which is your home office deduction. However, to qualify, the home office must be used exclusively in the taxpayer's trade or business on a regular continuing basis. So for example, if you are an Uber driver and you have a room that's set up with a computer in it and things like that, and you go in there just to do minor things for Uber, and then you're doing other things in there, but Uber isn't the main reason for using that office, then you cannot use that as a home office deduction. A taxpayer must be able to provide sufficient evidence to show that the use is regular. So if there's ever an audit, you need to have proof showing that you use that room for that business on a regular basis. And, you know, the office must also be the driver's principal place of business. So you can't be always doing business at Starbucks, but then when tax time comes, you want to claim the office as your business principal place. Uber provides its drivers with detailed accounting information, and the only significant additional record keeping is required is miles traveled between fares, which is accomplished while in the vehicle. So justifying a home office is problematic. I don't necessarily, sorry about that, guys. I don't necessarily see Uber drivers. I don't really see the purpose. I don't see it beneficial for you to use the home office. I think that it will likely be a red flag for you if you decided to do that, simply because you're out in the street transporting people. So what are you in the office for? Most Uber drivers run their business on their cell phones. But as a self-employed individual, you also have the ability to contribute to a deductible self-employed retirement plan or an IRA. Also, being self-employed gives you the option to deduct your health insurance without itemizing your deductions. However, these tax benefits may be limited or not allowed. If you are employed and participate in your employer's retirement plan, or if your employer pays for 50% or more of your health insurance coverage, then that's where you'll see the limitations on that. So you guys, here's my website. It's www.pajakoinc.com. You can go here for many other tax concerns that you may have. All of our office information is there. And you guys, hopefully you are looking forward to a great year in tax season. Thank you and have a great day.